You're listening to a Total Market Solutions podcast. Dekel Agri-Vision aspires to become a leading agro-industrial company in West Africa. It is doing so with the collaboration of local communities. Now, during the pandemic, it's been providing shareholders with monthly palm oil production updates. What does the most recent one reveal? Lincoln Moore is the executive director. So, Lincoln, you are heading towards the end of the palm oil high season. So how do you see it so far?
Hi, Sarah. Thanks for having me. Yes, I think we can say that we've had a really positive high season. We look at what we've done cumulatively to April to be double digit on the key drivers of our performance being CPO production and obviously price being over 25% up compared to last year to April is terrific. And that's broken down into January, February, March was we're ahead of last year in terms of production, slightly low in April, but overall, clearly we've had a really strong first 4 months of the year, clearly stronger than the first 4 months of the year last year.
So, any production guidance on May and June as you finish the half year? Because here we are, the middle of May, I beg your pardon.
Yeah, well, obviously we've got to be a little careful. But where do we start? I mean, clearly what we know and what people can read in terms of following the research is prices are continuing locally to increase. You see a slight uptick in CPO prices in April versus March, and you'll see that the same for PKO is continuing to increase. I expect that we can see these prices continue to creep up as we head towards the end of the high season. Our product becomes, of course, more valuable. So that will be a key driver. Clearly, last year, May and June prices were amongst the worst. That was the period where commodity prices dropped during the COVID period. So we will be heavily materially ahead on pricing. In terms of production, I think we'll be very similar to last year. Be an early guess. I think we're seeing fruit levels roughly the same, so it could be similar or slightly higher. But we're seeing a slight drop off in the extraction rate, the fruit content. So the oil content in the fruit it was slightly lower in the first 4 months, particularly in April. So we might see a bit of a balancing off of reasonable production with oil content, but it's going to be overwhelmed by pricing. So the pricing being so much higher than it was last year is no doubt going to lead to May and June being more profitable months than last year. And then, of course, we'll tally up the numbers at half year and go from there.
Okay, I'll ask you about the profit in a moment, but you talked about the oil extracted being slightly less. Should we be concerned about that? Is it creepy crawlies? Is it climate change? Is it something to do with soil erosion? Or
yeah, it is just agriculture. We have periods where the extraction rate is as high as 23%, and then we have periods when it can be 20.5%, even lower in the low season where the quality of fruit drops. So it's something we'd have. The main control we have of that is, of course, making sure we extract all the oil from the fruit at the mill, and we have a laboratory and we test daily and make sure that the mill is not the reason, but it's agriculture variation. You tend to never, like everything in life, get all factors in your favour. So for us at the moment, the overwhelming strength is clearly pricing. It's clearly been a better production period with slightly lower extraction rates, and when you tally that up, it gets to your gross margin, and I would be very confident to say our gross margin percentage this year will be materially ahead of last year.
Okay, and I'd forgotten you had a laboratory on site. That's good to know. So you mentioned that you're more profitable than last year. I know you hate the word guidance. I'm going to use it again. Any guidance on what we can expect?
I think we have research numbers out there from Arden, which we closely monitor those. So that would be the best place for investors to take a look. And I think, of course, they can start doing some basic mathematics as to the price we're selling for and the volumes we've done on, and CPO is the product, of course. So, one would suspect we're in double-digit growth territory in revenue. I think gross margin is in terms of percentage points uplift, double digit, and I think that's all going to lead to a much stronger EBITDA and then profit line than what we achieved this time last year. So we'll of course wait for the numbers, but we're clearly well ahead of where we were last year, and pricing is still very strong. We can see that the pricing we'll achieve in June from the current international pricing is still strong, and we're moving into the low season where we tend to get better prices because of the lack of supply of CPO. So I expect prices at this stage are looking pretty robust this rest of the year, which bodes well for us.
So I follow your company on Twitter, and the Tiebissou cashew project, it looks as though it's getting closer to completion. The flooring at that cashew project is so blue, it's almost like a swimming pool. So I'm assuming, therefore, that cashews getting closer and closer to production, looking at those Twitter videos. So can we expect sort of a more textual update shortly?
Yes, I think probably the next 2 weeks is a number of different work streams going on, and it would be an appropriate time, I think, in the next 1 to 2 weeks to give an update on all those. The flooring, as you mentioned, is we're producing a product which is food, so it's cleanliness is paramount at the final stage of production, so that's part of it. We're showing videos of our raw cashews starting to arrive, so clearly that's a guidance, I think, to investors that we're preparing for production, having started to buy the raw materials. So a full update on all aspects I would expect within the next 1 to 2 weeks, and it's fast and furious and heading to that really pointy end. So we're not far away, and look forward to providing a full update in 1 to 2 weeks.
Here in the UK, we're getting pretty optimistic headlines about we're going to be free of the COVID virus by August. Now, I know during the pandemic you've been providing investors with monthly updates about crude palm oil production, but you always say that it's your intention to revert to issuing production updates on a quarterly basis once the impact of the pandemic subsides. So when do you think you'll stop the monthly updates and revert to quarterly?
I speak to investors and seek feedback, and at the end of the day, we work on behalf of the shareholders, and it's been quite overwhelming, I think, amongst retail shareholders and also students, that the monthly guidance is extremely helpful, even though I think most people understand that can lead to some more volatility in the numbers. You just need 1 or 2 days here and there, and it can skew sales numbers or production numbers from month to month. So we'll continue with that. What we'll do with cashews, I think, that's obviously going to be coming on stream in the second half, is look at something similar, probably more broadly as we start, but then fine-tuning into something which is, reflective of what we're doing on the palm oil, where there's real transparency on numbers as the operation settles into a rhythm.
Speaking about rhythm, it seems as though the pace of this year is it's so fast. Here we are, the middle of May, and most of us are suffering from chronic digital fatigue as we work from the confines of our dining rooms, if we're lucky to have a dining room. But what are your goals, personal or corporate, for the second half of the year?
Yeah, I think we're all in pretty good shape at Dekel. We've actually had to go through 2018. We had terrible palm oil prices, and we worked our way through that. Same through 19. We did the same with obviously the challenges of COVID. So we've got a very stable middle, senior, and board group that's been through challenges, and we're excited about the opportunity that we have presented to ourselves at the moment, which is Ayenouan performing a high season, which has clearly been profitable, and 2, being able to advance cashew to production, which we think in time can be more profitable than the palm oil business. So we're pretty excited and buoyant. In terms of goals, we try to keep things quite simple. I think in terms of the palm oil, it's obviously the low season coming. It's about maximising prices, so we'll look to finesse on prices, both CPO and PKO, to maximise prices in a period where we have relative strength in terms of position compared to our customers. A huge focus will be on the cashew business. So, we really need to, I guess the 2 basic steps is, 1 is first production, and 2 is first sale. But beneath that is making sure that we refine all stages of the production cycle, which is buying, storing, producing and operating, which is a key part of that is the cracking process and maximising the amount of whole cashews, and then our logistics and sales. So if we can get to the end of the year and prove the gross margin, and that's what I always talk about, that's the main goal in the second half, prove a strong gross margin and continue to work with different customers and maximise prices for next year, when our customers will clearly have the confidence. We would hope to increase competitiveness in terms of the customer base and perhaps earlier payments from those customers. I think there's a lot to look forward to there, and in the background we have two other projects, a third commodity and clean energy, which was slowly ticking on in the background. We'd love to be in a position with the third commodity to be able to green light it internally and be in a position to press the button when appropriate on that project. And then importantly for us as well, the environmental and social side, the RSPO process is still aiming to be completed by the end of the year. Our mill, as we've said, is in really good shape. We're working with the certifiers on how to deal with the thousands of smallholders, but the main crux of the RSPO is our mill, and we're pleased it's in great shape, and we'd probably look to provide a bigger update on RSPO over the coming weeks as well.
Okay, very quickly, Dekel Agri-Vision, formerly Dekel Oil, right at the beginning, you were pioneers of ESG. You were very good with corporate social responsibility, which has now been overtaken by ESG. Can you give me any tangible anecdotes about how Dekel Agri-Vision is touching lives within the communities it operates in?
Yeah, certainly. Obviously, RSPO was one I've mentioned before. We continue to have numerous community programs. We've mentioned before in terms of our involvement in medical facilities, involvement in assistance with education and transportation for students, water facilities for the local community, hundreds of people from the village employed, and thousands of smallholders reliant on us as a client. We're continuing to introduce other initiatives. Newest initiative is providing our smallholders with free healthcare and free healthcare for their families, dependent on providing us with certain quantities of fresh fruit bunches. And with that program has actually just started recently, and the take-up's been amazing. So again, clearly something that the community values, and I think everyone values right now is healthcare. So another area where we've been able to use our relative strength to assist our community and small farmers.
Touching lives. Brilliant. Lincoln Moore, Executive Director of Dekel Agri-Vision. Thank you very much indeed for joining us.
Thanks, Sarah. Appreciate it.